All right, 2026, the trends, alerts, warnings, new rules coming out. Katya, what have you been hearing?
So the newest thing I heard is credit card interest rates. The current administration wants to drop them down to less than 10%, which would help us consumers that do have credit card debt be able to pay them. There is that fear also on the flip side that creditors, of course, don't want that because they're going to be losing out.
Hmm.
Would they rather just close the accounts to not go through this? And that would severely hurt us consumers that have credit cards, open credit cards. So that's the newest thing, right? We get a lot of calls asking about this. We know as much as everyone else knows. It's something that's proposed. It hasn't been approved just yet, but there is a lot of different new rules that are potentially going to go into play soon.
You know what? You brought up such a good point because when people hear this, they're like, oh my gosh, this is great. Under 10%. This is fantastic. But just like you mentioned, the creditors might just close the account out. And if they close the account down, what does that mean to us consumers? Your utilization is screwed, right? On your
Hmm.
credit cards. You don't have an active line of credit anymore. So your average age of history is diminished.
Diminish, yeah.
What else?
We're losing history, right? Our scores are going to start to plummet if this is the case.
Yeah. So I don't want to be doom and gloom here, but
No.
the reality, there's always a flip side, right? Something, if it sounds too good to be true, is it? Probably, especially when you're dealing with credit. There's
Hmm.
always that flip side. So if you're faced with some of these newest trends and someone's like really pushing on it and making it seem like, oh my God, this is the best thing possible, I would sit back and ask, or even reach out to us and ask about what is really going on because we will do extensive amount of research. On the flip side, we also probably know someone in the bureaus or in the scoring models that will give us the inside scoop of what's really happening. Another thing that I've heard, and it is the way forward, is the Vantage Score Model 4.0. Um, they informed me that they will not have different types of models for their version. Like in FICO, there's a FICO mortgage model, right? Then there's the
Auto.
dealer's auto model, right? So FICO has different models, different versions, different models. It makes it quite confusing if you're not aware of what you're looking at. And then if you don't know what to ask the creditor, you're pulling a credit report and a score that does not match what they're pulling. Is that fair to
Hmm.
say?
Yeah,
Right. So it becomes
happens all the time.
very confusing. Vantage score, I was informed many of us, if we use like a Credit Karma, we're pulling Vantage score 3. They do have a Vantage score 4 that is being now pushed to into the market. That is the new scoring model that mortgage lenders are starting to use, Vantage Score 4. And what I found out is that Vantage Score 4 is being optimized specifically for mortgages, right? So they will have Vantage Score 3. It's a generic score, right? So it's one score for everyone, but the versions will be optimized for specific things. So Vantage Score 4, again, one generic score for everyone. If my auto dealer pulls Vantage Score 4 or my lender for mortgage pull Vantage Score 4, they should pull the same score. But what I was informed, it's optimized for a specific industry. So
Mhm.
4 is being optimized for mortgages, and they will soon have a version 5 that will be optimized for credit cards. I mean, this is great information, but scary because, again, as consumers, we're now dealing with two different models with different versions. And what are we looking at?
Yeah, I was going to say it adds more to the confusion.
But that is something that is it's I wouldn't say it's a new rule. It's an alert. It's what's going to be happening in the very near future.
Yeah, we just have to be part of doing our research, right? Last year, a lot of us were hit with issues with our student loans.
Mhm.
We were all made aware, but it's making sure that we know what we have, what's on our report, and how these new rules can impact us.
Any other new rule or trends or information that you've heard?
I've heard the student loan. So all of our student loans that were in deferment last year, 2025, actually end of 2024, early beginning of 2025, they came out of deferment. Um, our payments were due.
Yep.
If we did not make payments, what I have heard is that 2026 is when we're going to start seeing wage garnishments if we have student loans in collection, or they may just pull back our tax refunds if we have it.
You know, it is something I know a lot of the counselors have repeatedly informed the consumers, call your servicer, right? So
Mhm.
if you do have a student loan and you're still not sure what's going to happen, call your servicer. We can't emphasize how important that is because it will be a shock when you see your pay stub a few $100s less than what you're expecting it to be.
Right. And it may be too late at that point to renegotiate or try to do a lesser payment amount. Can't look the other way on these things.
Yeah. And you mentioned you had a client that told you a unique situation that you want to make sure that people are aware. Like this is almost a warning. If it sounds to be too good to be true, it probably is.
Mhm. Yeah, I actually spoke to a gentleman not too long ago, and he was really upset and confused why his scores were where they were. He tried to get a loan, was denied because his scores were in the high 400s, low 500s. He mentioned that he's got open accounts, he makes payments on every single month, he's never been late. What am I doing wrong?
Yep.
Come to find out, what he did essentially was about a year and a half ago, he renegotiated his credit cards. Several credit cards were renegotiated and he went into a new plan. So he was paying less than what he actually owed the credit card companies. And he went into a payment plan. So for the last year and a half, he's been making payments,
Mm-hmm.
but essentially with credit, they're reporting all late. Why? Because we owe a certain amount. That is what the credit report shows. And we're supposed to be paying that amount, not less. If we're paying less than what we actually owe, that is in credit, it's a late payment. It's very black and white. He was not made aware. He was under the assumption that, well, I renegotiated my debt. I have not been late with this. And he wasn't, and he may not been, but for the original debt, creditor doesn't see it as you have, one agreement and then we're going to do another agreement. No, they see the original agreement, what you owe, and that's it. Right? So he felt very misled because this wasn't explained to him. He thought he was doing good. He thought, like most of us, we go through hardships. He's like, I really couldn't keep up with my payments. So I reached out. I took the initiative to pay them, but not pay everything. And scores are where they're at.
At the end of the day, it is a settlement,
It is
right?
a sort. Yep.
And a settlement is late. And
Mhm.
so that's the hardest part, that if you're looking to do this on your own, kudos, right? Because some people don't even want to deal with their creditors, but you have to understand that if you're settling it, chances are, unless you negotiate part of the settlement that it will be deleted at the end, it will still be considered late.
Month after month, we're making a payment, but it's a late payment, and that's what is gonna hurt our credit so much.
And, I want to emphasize that there are other options debt settlement or settling on your own is a great option if you're looking to potentially save money. But as you mentioned, it will continue to report late. There are some ways of structuring it that could benefit your credit at the end. Usually, creditors or collection agencies won't do that until the end. But another option I always want to stress is understanding what debt management is. And if you don't know what debt management is, watch one of our videos so that you have a clear understanding of debt settlement versus debt management.
He would have been a great consumer for a debt management program, right? But what I explained is your goal was your debt, not your credit at the time, right? We have to realize that debt is one thing, credit's another.
Yeah. And understanding how both of them work together does help you and relieve some of the frustration. Man, that guy, I feel bad for him because that is extremely frustrating when you think you're doing good and then find out
Yeah.
that you feel fooled.
Yep. And that's how he felt. The good thing is he was almost done with his payment plan, so the late payments are going to stop and um start from scratch now.
So if you want to know more about alerts or if you've heard about an alert or a warning and you're not sure if it's true, reach out to us. Subscribe and reach out to us. Let us know what are those warnings that you're hearing, and we will ensure that we get you the facts.